So in this live stream today, we're gonna talk about a few things today, and we're gonna start by talking about the dollar, what the dollar is doing so far, and after that, we're gonna scale down to talking about all the foreign currencies. So looking at the dollar right here, we're currently on the daily time frame, and what we're working with is what the daily time frame is currently showing us right now. And if we're looking at what the daily time frame is showing us, you can see that overall, you can see overall right here, we've been trending to the upside until we got to this high. And then after that, you can see price started creating lower highs and lower lows, lower highs and lower lows, and then lower highs and lower lows, right? Now you can see that each time price came to the upside, it ended up dropping lower, breaking the previous low. Each time it came up again, dropped down, breaking the previous low, failing to run the previous high. So this means that these previous highs are high resistance liquidity levels. And these lows right here are low resistance liquidity levels. So price can easily run through these lows, and it's finding it difficult to run through any of these highs. And that is the reason why, even after we made this high and dropped down, creating this low, you can see how many daily candles it's taking price to run above this high. This already shows you that this high is a high resistance levels. Even though we've come to this high the first time, rejected off it, come again, rejected off it, come again, rejected off it, and then we're right there again, rejected, and then right here again. So price is finding it so difficult to gravitate above this high. It doesn't mean that going above this high is impossible, but it simply means that for the market to go above this high, it's going to take a lot of pressure. It's going to take a lot of push, a lot of resistance for price to rally above this high. But if for any reason price should drop off this key level, it's not going to take price so much effort to run below this low, because this low right here is the low resistance liquidity level. So after that being said, if we go back to see what's happening on the weekly time frame, you can see on the weekly time frame we created a high, a low, and a high and a low, and then price rallied to the upside above these two previous highs, and after that we saw this displacement to the downside. So this right here was the last impulsive move that tapped into this inefficiency before it dropped down, breaking this previous low resting right here. So what we're watching right now is to see whether the market is going to rally and run this buy side liquidity, or we could potentially see a drop off from this key level to run this lows. Now, that being said, what we're going to now do is we're going to look at the foreign currencies and see if it presents us with any sort of opportunities. And the first thing we do is we're going to go and look at Euro US dollar. So for Euro US dollar, if you look at Euro US dollar right here, if we look at Euro US dollar, I was actually on a trade on Euro US dollar, but the trade took me out at break even because I trailed my stop loss to my entry, and it took me out. And right now, as you can see, price, it took me out because my entry was around this level, and I just trailed my stop loss, I think around here, and I trailed my stop loss right here. So two things are involved right here. Either price has come down to run this sell side liquidity, knowing fully well that traders who got into this level would have traded the stop loss to this key level. So price could potentially come down, run their liquidity, and then rally to the upside. That is one thing that could happen, or we could now drop down running this overall sell side liquidity. But that being said, we're going to look at the overall structure on Euro US dollar, and we're going to start from the weekly time frame. So on the weekly time frame, you can see we created a high, a low, and then we're within this range. We're within the range high and the range low. So we'll go to the daily time frame. On the daily time frame, you can see very clearly price is consistently creating low, high, and a low, and a high, and a low, and then we'll have this high, this low, this high, then we'll have this low, and then we'll have this high. So right now on the daily time frame, we're within this range low and this range high, right? Now you can see what we also have right here, an inefficiency. We'll have an inefficiency resting right here, which could act as liquidity for price to come into this inefficiency. We'll go back to the daily. This was the last move to the downside, mitigated this key level, expanded, broke structure. So if we are to see any sort of rejection, we anticipate for it to happen within this key level. And if we go to daily, that key level aligns with this inefficiency. We'll go to 4-hour time frame to see what's happening on the 4-hour time frame. And on the 4-hour time frame, we had a high, a low, and right here a break structure. So if price should reject off this position for any reason, this would be a perfect place that I'll anticipate for it to come to. That is, if this key level where we are right now, if it doesn't act as a catalyst to send us to the upside, where we are right now, where we are right now, if it doesn't take us to the upside, then just know that we're going to come into this zone. And if we go to the 1-hour time frame to see what's in that zone, this was the last push before an impulsive move to the upside. So let's look at it on the 2-hour time frame. Not really clear. 4-hour time frame. So look at it on the 30 minutes. So right here, we had this sell, and then this, and then this. And after that, we had this that then broke structure. So if for any reason where we are right now in the marketplace, I'll go to 4-hour time frame. So if for any reason we don't go to the upside from this key level, this would be the next position that I'll be anticipating to see price come into. So I want this key level to hold and take us to the upside. I want this key level to hold to take us to the upside. I'm not going to try to get into any trade from here anymore. After price took me out on break even, I'm not going to try to get into another trade from here. I'm just going to sit on the sidelines. But if this zone should send us to the upside, what I'll do is I'll be looking for potential areas to get a re-entry and then continue higher, because I still remain bullish on Euro US dollar. But if we should drop off this zone on Euro US dollar, this is the next level that I'll be anticipating to see price coming to right here. And if we come in here, all I want to see the same thing is 15-minute shift to market structure. Once I see a 15-minute shift to market structure, I'm going to look for a buy and buy this to rally above this highs. Because if we look at this right here, if we go to the daily time frame, our drawn liquidity still remains right here. This remains our drawn liquidity where I'm still anticipating for rates to come into. So whatever price is doing right here, I see that as a consolidation, capitulation. So, and after a consolidation, the next thing I would like to see would be an expansion, right? And the dollar already, I've shown you on the dollar on the daily time frame. So on the daily time frame, you can see how the dollar has consistently been creating lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. So if price should run this high, what I would like to see, if we should run this high, I would like to see a run on the liquidity, and then price should fail to close above it, dropping lower, breaking structure, and then I could potentially see a continuation to the downside. But if we close above this high, if we break above this high, if for any reason we break above this high, close above it, showing a lot of momentum that we want to continue going to the upside, then it means that this buy side liquidities, price could now start hunting for them, and then could potentially start running above this high. So that is what I'm watching on the dollar, what I'm watching on Euro US dollar as well. And we're going to look at gold as well, because I basically got into this trade on gold. So the trade is in a little profit, but hopefully it plays out very nicely. So I'm going to walk you through the reason why I'm bullish on gold and reason why I got into this trade. So I'm going to look for plain charts that doesn't have any analysis on it. So right here is the daily time frame. I'm just going to use this one. So right here is the daily time frame. And on the daily time frame, you can see that we've been consistently creating highs and lows. You can see this. This was a previous high, and price broke this high. After that, we created this low right here, and then we created a higher high, and this low. Then we created a higher high and a low. And then right here, you can see that price wicked above this previous high. It wicked the previous high, and then we drop down. Now look at this. Now this week right here, rallied above this high, and we still fail to create a lower low. So if after we wicked this high, price dropped down, breaking this low, I would have seen that to be a run on liquidity for buy side liquidity, and then a break of structure right here. That's how I would have seen that. But because price did not run below this low, it just created this low, with the high, failed to create a lower low. What I'm gonna now do is to watch to see what price is doing on the lower time frame, like the 4 hour time frame, right? And on the 4 hour time frame, you can see right here we created this low, this high, failed to run this low, failed to run this high. Now we'll go back to daily to see what price came down to mitigate this candle right here. This was the last push to the downside, took liquidity, rallied, breaking this structural high right here. So right here, key level. We come into this key level. I go to the 4 hour time frame. I want to see the structure price is creating, the high, the low, the high, the low, and then right here we created the high. And this high broke, this high we created right here broke this previous one. Now we'll have this inefficiency. Mark that out. I go to the 1 hour time frame. Now I'm using the 1 hour time frame to understand the structure price is trying to create right here. And right here we have inefficiency resting right here. And price came into that inefficiency on the 1 hour time frame. We created a low, a high, and then this low, and then this high. And right here we have a break. So after this break, this was the last move to the downside before breaking this high. So this is my key level. And look at what price did to this key level. They came back down, ran liquidity below the low, failing to close below this low. So if price had dropped down, took this liquidity and closed below this low, I would have removed every intention to go long on gold. I wouldn't be interested in gold going long. I'll be interested in it coming to the downside, potentially running these lows. But because of how price came into my key level, tapped into it the first time, came the second time, wicked below it, rallied, came the second time, wicked below it, and then came again, wicked below it. And you can see how price failed to close below these lows. So this right here is showing me that there's a lot of momentum to the upside. So what I do is, after this whole consolidation right here, I'll look for a break of structure within this zone. And right here we'll have a high, and we'll have a low, and then we'll have a break of structure. Now this right here, this right here was the last move to the downside before an expansion that broke structure. So I wanted to see price come into that key level. And after it came in, that was where I was looking for entries. And another reason, we have this inverted fair value gap right here, also acting as a confluence for me to look for buys in this key level. So that was basically why I got into a buy from here. And right now price went into profit, and for some reason it's coming back down. But I'm still going to hold the trade anyway. If it takes my stop loss, then it is what it is. That's part of trading, right? So my entry still is resting right here. It's not really at my entry yet. My entry is the red line. It's coming back close to my entry. And I'll be watching it closely because right here, we made a high, a low. This was a high, this was a low, and this was a break of structure right here. So it's either this is a retest, or price will use this opportunity to run down and run this sell side liquidity. And if it runs this sell side liquidity, I'm just not going to be interested in continuing to be on this trade. I'm just going to close it with whatever small loss that I've already incurred on it. If it runs this sell side liquidity, it means this trade is invalid. So that is what I'm looking forward to see on gold. But if we fail to run this low and then break through this high, I will trail my stop loss to my entry and then allow the trade to run, because potentially this is where I'm anticipating to see gold come to. I'm anticipating, if we're bullish, I want to see it come back into these key levels. These are my take profit positions. So if the trade works, this is what I'm anticipating for it to come to right here. And then this would be right here would be my first take profit. And here will be the second take profit. And then here will be the close. The midpoint of this week's, the consequent encroachment, is going to be the close. Once price gets there, I'll look for exits and I'll close the entire trade. So That is my analysis on gold and what I'm looking forward to see. I appreciate you all that tuned in on this live stream. You all amazing. Thank you for being a part of my World Club. And until next time, I'll talk to you all later. I wish you all a wonderful day.